All right, cool. So just jumping into it, what are we at? 10:30 on the Tuesday. So sort of halfway into, um, I don't know, getting towards that sort of Asia Open, where sort of Tokyo is sort of coming online. Just sort of start off with the Aussie because obviously this is the sort of trade of choice in that they've been obviously trading long since this wedge break, well actually prior to the wedge break in that, but certainly trying to get long a couple of times around the sort of 63 zones. But obviously, sort of through the bulk of last week, we got that little, we got the breakout and the continued sort of push up. So we've got RBA coming up, just was about 4 hours or something now. So I mean, expectation there, I've heard 60%, I've heard 70%, but I think about 60% is the general sort of consensus with the market that they are going to raise by 25 base point. So, I mean, obviously some of this move, it's come from two parts. It's come from the US dollar sort of sell-off, and also the fact that RBA are looking and tipping to raise rates, of course, which is the first time in three, I think they held for 2 months, so first time in 3 months, sort of looking to sort of combat that. So, if you saw sort of the plan over the weekend, obviously, look, this is where the week finished up. We finished up on that nice big long sort of bullish candle, and that came up way past all these wicks over here. And if we look for sort of like little things about how strong these closes are, because when you look at these previous times with the wicks, it's come back up, and it may have closed strong here, but it didn't actually manage to get anywhere past where the wicks were. So, this one, that's why we're taking note of this here. So if we sort of look at just a little quick thing here, these are the high closes. So everything above here, of course, even back to this candle as well, very reminiscent of it all. But this was all wick. So, that's a 38 point close, and these are on daily candles, but a 38 point close high above any other actual daily close since back in sort of mid-August, and obviously that was in a downtrend at the time. So yeah, it's a nice sort of push up, but this little red line sort of shows where we're expecting it to sort of come back. Where I've been trying to have actually sort of got a couple of longs opened up. A couple of quick shorts yesterday, just because I did think this was coming down, but I closed them out above 65 because I did want to get long in the 90s. But of course, it was a pretty flat day yesterday, really. So, I mean, if you have a look, it was just the sideways chop for most of the day. This was like most of the bulk of the day, and then obviously sort of broke down a little bit towards the end. Not quite sure what this little spike is. If anybody knows what that is, that'd be interesting because I saw that pop up on a couple of different platforms. But obviously, I think either sort of just fat fingers or something like this. Because if you look at this, it's just boom, boom. But maybe it's just there to sort of stop everyone up. But it was 10 to 10 local time, so interesting with these sort of things. But obviously, that's from 90 up to that's a 13 point 6503, so 13 point little up there. So maybe sort of hitting some stops. I don't know. These things they happen every now and then. Sometimes they happen only on some platforms, not on other ones. And the fact that it happened on a couple of platforms is interesting. But yeah, nothing really super to note of. But as I said, look, this is the grey area. I was expecting to sort of come back to. We got the fill here. One of these other fills that I got as well. Same thing happened with gold last night. Gold, obviously, I'll get to in a moment and that, but sort of broke through it and did sort of pick up the entry subsequently. But I've got an entry that's I think it was at 85. So I mean, if you look at it here, it's like pretty much like that. That's the entry there, and of course it didn't fill because it's got to come down. The spread's got to sort of cover it, kind of thing. So it's always frustrating. Sort of like I've layered a couple of sort of long entries coming back through here because obviously you can see the same sort of thing happened here. I missed it by like a pip or two. So I think around 95 or so, or 94, I think I was. Oh no, it was this one here actually. It must have been 92. Yeah, 92. Because as I said, look, 90s I do believe is a fairly strong support resistance for the Aussie in that each time. So that's why I'm expecting this sort of pullback to come down here, entries to sort of be gained. It's overshot it a little bit, but obviously from a technical standpoint, it's coming into this nice sort of little support zone along here, which is obviously the closes of those dailies from way back. So from that sort of, where's this? Yeah, sort of mid-August. Geez, it's been a while. So Aussie, certainly look, it's moving forward. I'd expect a little bit of an appreciation in price, sort of moving towards the rate decision. A couple of things that I'm looking for, if we can get the rate decision, and then, I'll get to DXY in a moment, but if we can get that continued sell off of DXY, that again is giving two-prong approach towards us pushing forward. And I think that's what's going to get us up into this price target. I think this sort of 65, like 65.70 to 65 or 66 100 handle, or the 66 handle, I think this is going to be quite tough to get through. Like this is great, and it's been a very solid break, but you've got a couple of things happening up around this zone. One being obviously this sort of measured move, which was actually, yeah, that's right. We were taking it from this sort of swing high position here. So, I mean, you could almost sort of say that, from the break point, break and back test kind of thing, it's coming up around this sort of 60, 65.40 zone. But price target for me is 65.80. So I think sort of certainly if we get a bit of if we get that raise today, and then, obviously if we can get that coupled with the DXY sort of continuing to sort of sell off, it's in a little bit of a push up at the moment. I think sort of we could definitely sort of see a little bit more of the upside, or obviously definitely see a bit more of the upside of Aussie up into this at least first price target. Just a quick one yesterday as well that I did sort of notice, I think, which was it on the 1 hour. Yeah, it was just this is another sort of little confirmation of why I was trying to sort of short it. You were just seeing this complete, like, as you can see, it's not a real sort of negative divergence because, you would want to see price be appreciating up, but still the price had sort of gone down, pushed itself up. But if you look at the same time, look at this buying pressure, and it just didn't match with it, and it just really never really sort of took off off the sort of oversold. This is only on a 30 minute, so obviously this is just for that intraday trade that I was looking at. But as you can see, that sort of second push up here didn't really sort of come up with too much, but it was just mad choppy through the day. Like, it was very much an in and out kind of trade. Consensus is still topside. So, a bit more sort of a raise in Aussie. So, I mean, this is really just a little bit of a quick in and out kind of shorts because I did think we were going to be coming back down to test this zone, which we have done in the end. But of course, there was a lot of stop outs. There was a lot of attempts to sort of get through this area here. And so we can tell that sort of like from this that, look, the buyers are certainly holding this here. Like this is a very key area for us to break through the 65.20 zone or 65.25. Just like we saw with all those daily wicks, this is only on a half hour, but you're seeing all these sort of wicks coming up here. This is just showing that every time it gets to this level, whoever's driving it, or group of people, or collective of people, they're happy to sort of sell it, and they're not letting it go past this level here. So these kind of things, okay, it's going to be a strong resistance, but it's going to need the news. And if we get the raise, I imagine to get a little bit of a push up sort of prior to the RBA, and then certainly I think if we raise, we'll see a continued sort of push to the top side there. And as to sort of how high we go, if DXY, the thing is, Aussie can still always have good data, but if DXY, US dollars abroad is pushing up, it's always going to stifle gains a little bit. So, you may see the initial pump of the move, but, again, if DXY or US dollar is running as well at the same time, they're the times that you'll see the move go up and boom, and it'll reverse back down. They're the things you got to watch out for, because if we sort of start at a certain point, say we get, we're here, and then sort of like, the news comes out, bang, 25 base point, and we go up, a little bit up, like this, but then we sort of get the US dollar start to sort of firm up. If we come back down and we take out the point where the data came out, and then sort of continue further down, that is obviously not a good sign. That even after we have this sort of strong bit of data coming out, that we sort of actually take out the level. It's very important sort of to watch and mark out where the market is sort of priced it at as the data drops. Because if we take out that point, that's when we're going to see a strong sell down, and it's going to come. I reckon sort of the potential for that then is at least back to the mid sort of mid 64s, if not back down to this little sort of zone down here, low 62s. I mean, I don't think this is going to happen, but it is something to be aware of. This is a good example of it over here. This was I think this was the CPI. So the CPI came out, and you can see big move up, tried to hold it, came back, drift, back down. This is where the data came out. And as it broke this, look at the sort of continuation afterwards. That just got absolutely decimated. I mean, this is when Aussie was very much still in the sideways, but that's supportive data, high CPI, second month in a row. That was ready for it to sort of take off there. But obviously we came into this little sell zone. It came back down, took out where the data point was. So that's always important to watch because the downside moves after that can be quite heavy. So anyway, this is where we're at the moment. As I said, I do expect a little bit of a sort of upside move sort of through Asia as people sort of position for it. Obviously, they would have positioned a little bit for it last week, hence all these sort of gains. So yeah, we'll just have to sort of wait and see how we go sort of coming through to it. But I am expecting a raise. And then I do expect this 65.20 to be a good, strong confirmation point if you can break through here and take it out. Because again, this 65.20, if we zoom back out one last time just before we flick over, this is also the highs that we've sort of got on the top of these wicks. So as you can see, 65.22 is the high on the wicks. I think we got 65.23 or something yesterday. Previous wicks on this little push up as it was sort of on its way down as well. So, I think this is going to be a nice sort of key point to get above to move towards our price target of 65.80 in the short term. And then as from there, potentially some more sell off. We'll have to see what the US dollar wants to do after that. Next sort of key level will be obviously to get above this. Again, you just got to look, where have the sellers been previously? And we can see wicks here, wicks here, wicks here. These have also been areas of buying and buying. So this is why I think this will be quite a strong area to sort of get through. And obviously, once we get through this, we may sort of come back down here, then go up over here. But once we get through this, that's that next confirmation of moving up higher. At that point, I'll sort of start to look a little bit more because you've got this super long weekly resistance, which is worth noting. And this is getting up the top here. So if we really get back up to these previous highs, then you're breaking out of this sort of very strong downtrend channel. So I think this dotted line that I've got marked out here, sort of up around currently, so obviously it's a sliding thing, up around that sort of 67 zone, I think that's going to be a very tough nut to crack because, as I said, the higher the time frame, the stronger the resistance, support, whatever it is, the segments of the market. So that's one to watch, but that's not up until around, so we'll probably, depending obviously how fast we get there, so chop over this way, but around that 67 mark, I think is going to be sort of some pretty tough stuff. And, at that stage, again, we look at sort of other areas where we've seen the sellers and sort of around this sort of, again, it looks 66.90s, 67.15s, these sort of areas here coming in conjunction with this falling resistance on the weekly. I think that's going to be quite tough to crack. All right, anyway, that's again getting a little ahead of ourselves. So here and now, we got the pullback, got some long entries, looking for a bit more upside. Okay, DXY. DXY obviously got hammered over the Friday. It had a little bit of a reprieve sort of late yesterday. You can see early moves. It started to, it's probably a bit better on the shorter one here. It was starting to shore up a little bit of a sort of bear flag kind of thing in the break here. Obviously tried to sort of come down, but if we have a look on the 4 hour, so this is the idea. You got the selling support, comes up, makes resistance, and then bang, this goes for the next leg down. And this one at one stage would have been a long yellow candle, so everyone's sort of thinking, okay, boom, push down. So the price target here is obviously this 64, I'm still stuck on the Aussie. Price target here, short term, is still obviously this 104.20 to 104.40. So, I still think we've got some more downside. But again, this is where we know that the sellers have been, they've been buyers, and we can see they've sort of stepped back in again, and they're holding it at that zone. I do think we've still got some more downside here because not generally, these ones I thought were more sort of like short squeezes. I think this is merely just a sort of bit of a, profit taking from this thing. We got these known zones where it's obviously sort of people are starting to take profit and it's pushing back up. But I'd be looking for that second push down to sort of confirm um, whether we've actually got this sell down or not. So at the moment, we're coming back up, coming towards the 83, sorry, Jason, I've got a bit of dyslexia on this one. The 38 it also comes in line very much spot on with the wick lows of that last sort of drive up. So again, so this was the area of a support. So, it's probably going to be a fairly good idea that we're going to get a bit of a sell down if we do get a bit of a push up. So we'll wait for DXY. I think DXY should be sort of coming online pretty soon. And that we got sort of over the weekend was the US daylight savings. So that sort of obviously sort of alters things around a little bit with the hours. But at the moment, yeah, we're just sort of seeing, yeah, a little bit of a grind higher on it, but nothing really of note. I think this is more, as I said, just a little bit more sort of profit taking. There's not really anything that says, okay, yeah, we're screaming back up at this stage. Above this 38, you've also got the lower time frame sort of resistance here. So again, this is kind of an area that, oh, I don't know what the hell happened there. Yeah, this is a bit of an area here at the 105.40. Oh, yeah, 105.40. I'd expect us to get a little bit of a sell down. So if we do get a bit of a push up here, I expect this to go in line with these sell downs here and then sort of push back down. I mean, of course, that doesn't mean anything as to sort of that it actually will, but that's just an area where I would expect at least an attempt to drive it back down. As I've said a couple of times, DXY doesn't mind really deep sort of pullbacks. So it's very possible that it could sort of, drive up a little bit higher before it comes back down. You see the 61 retracement of this last drive down also comes in line, smack bang, in the middle of that weekly sort of previous support range zone. So, again, that's another possibility if it does get onto a bit of a push. And this is the thing to watch, as I said, with Aussie, that sort of like, if DXY is, even if it's in this sort of short-term rally before it sells back down mode, this is what will sort of, just retard the gains of whatever Aussie may get from the rate rise. If we get sort of, if we get the rate rise with DXY or US dollar moving in this sort of downward trend at the same time, that's when we're going to get the double whack to the top side, and we're going to see the gains hold and possibly exceed what they could otherwise. But certainly, I still think there's a bit of more downside with US dollar here. I've still got the price target a little bit lower. As you can see, it's marked out down here. So it's just a matter of sort of letting him sort of take some profits, get some more people to get some sort of liquidity to get short, and then sort of drive it down a little bit further. Flipping onto gold. Gold, let's get on a bit of a higher time frame. Look, as I've said last couple of weeks, gold's been a bit sort of slowing, almost a sort of, I'd still say it's sort of consolidating, but it is a bit of this rolling over kind of action. It needs the drive up. It needs it needs the fundamentals to get the drive up. So, I was expecting a bit of a pull down here. We could see that this little short term sort of rising support was holding okay, but yesterday Asia gave it up, and boom, we're just seeing a little bit of a dribble back off down here. So, where it is sort of coming in and trying to hold at the moment, you can see, look, this is the area we've seen on this horizontal. That's why we've got it marked out. All these areas here, this is where we've seen the buys come in a couple of times. So we're expecting at least a rally effort up here. If it gets a little rally up and then comes down and breaks the low of these pushes down here, so if we go under that sort of 64, as I said, a close under here, I would say, okay, look, I'm going to be looking a little bit lower to sort of like, around the sort of 60s. The price, this was, I think this is a little bit obsolete now. This was that sort of rising wedge measured move came down here. I mean, again, look, I'll leave it down there because if I can get some buys down in this zone, I'll be very, very happy to hold some longs there. But in the short term, I expect a little bit of a push up here. We'll wait for that second drive down to sort of see if we're going to take out the low of wherever this candle is. This candle, of course, it could still sort of just melt down, but I expect a short-term little push up here, maybe back up into the 80s, 83, 84 kind of seems to be a reasonable sort of level where it should attempt up, a little bit of a push back down, and that's where we'll sort of go. The options then are we going to come back down here, hold this support zone. If you hold that for the second time, then that's when you're going to get your push back up. Alternatively, if this sort of goes up and comes down, and we sort of see this one drive through and take out the low of this candle just here, then I think that's going to be the confirmation that we're going to be sort of going a little bit lower. And I'll be sort of, again, still looking for buys, but I'm going to hold off a little bit and get my buys a little bit lower. And this is going in line again with DXY. Gold, it's very sort of risk, what I've dubbed risk fluid. Sometimes it likes to run with risk on, sometimes it likes to run with risk off. The key with sort of trading gold is to be able to sort of identify how it's sort of identifying itself at that time, because sometimes it'll run, like, as I said, more often than not it'll run with a very strong inverse relationship to DXY. But obviously the last couple of weeks with the Middle East situation happening, we've seen DXY wasn't appreciating, but it was certainly holding flat at the same time while gold was sort of pushing up, meaning that sort of they were both sitting in the risk-off camp. But now we're sort of seeing little de-escalations, which is a bit more of a risk-on sort of thing, and it's depreciating with that. So yeah, it's obviously with that sort of still slightly in the sort of risk-off camp, because obviously if it was risk-off, escalations of these sort of things it would appreciate. But, we've got to sort of see what happens again with DXY. I think sort of once DXY sort of goes for its next leg down, I think a lot of the money is going to need to flow somewhere. And I think sort of gold is still a decent option for that kind of stuff at the moment. So sort of clean this up a little bit so we can sort of track what we're doing a little bit better. But we can certainly see, I mean, mainly it's just sideways. If you look at that sort of run up from the last couple of weeks up until sort of what we've done over the last week or so, it's just gone bang, bang. And this is what I identified the other day, that we were getting these slow, like, they're only, this is what, 2010, 2007, 2004, they're $3 lower each time, but they are lower highs. So, that's the thing to say. It may only be subtle, but that's certainly something to look out for. So I think it's worth sort of keeping an eye on this sort of falling resistance here. If we are looking for the top side moves, if it can sort of obviously sort of get through this little zone here, the 2000, well, obviously it depends when it gets to it, but around, it needs to really prove itself and hold and close up around this 2000 zone again, in my opinion, for more sort of upside. I mean, 2010, 12 in change, this kind of thing, that's your major breakout. And obviously a close up around that zone, even better. Okay, just flip on to copper. Copper trading along very nicely now. So obviously sort of been trading this sort of major support area here. If we get onto the daily, was how we were sort of really seeing it. So we had those two options as it sort of had that first breakout, whether it was going to get rejected down here. Obviously I was leaning towards the sort of upper range. So I think we can sort of delete this for now because that doesn't seem to be so relevant. And for me, it's sort of proving itself up into this top range. We're moving towards price target up over here. We've got the previous highs. You can see this probably a bit better on the 4 hour, but we've got these previous highs on the horizontal. We've got the underside of this big triangle that was happening. I think that's a reasonable area in the short term. We could see a little bit of a sell-off there. If it does sort of tend to sort of come back off this, you'll also be breaking this sort of short-term sort of rising support that it has been sort of respecting and shoring up. Obviously, it's had a couple little quick sell downs, but it's pushed up each time, and really it's just moving up into a little pennant at the top up over here. So obviously look better on the on a smaller kind of time frame here, but you can see this just at this sort of stage. So I still think we've got this little sort of resistance level that obviously tested 1, 2, 3, 4, 5, 6, and then popped through on that 7th one. So I'd expect that now it's consolidating out the top side of this. we'd have the next sort of push up from this. And this is obviously lower time frame, but you know, your measured move from this is going to put this right up into that price target as well. So I think we've still got a little bit more upside to this. And again, this is another thing that'll help the Aussie drive a little bit higher if you can get a push up there. Finally, I'll get on to China, because obviously I've been trading downside of China for a while here, and we can see this on a short time frame. You know, this shores up the nice little uptrend sort of support, came up here, tipped it into the major horizontal resistance by like, you know, a cent, not even, whatever this is, 10,000th of a cent or something, and the break, boom, back down here. So we're at a very interesting point with China at the moment with the yuan, because this is what we've been looking at for a long time. This sort of rising support, which is actually going back from, you know, 20 sort of Feb 23, so all year, and it hasn't had a touch up since May. So, you know, this is pretty much the expectation, as you can see with the line here, where I was expecting it to come. I mean, there's been a number of times that I thought this was going to break down. Obviously, sort of coming down here the first time, second time, and it's just been this just monotonous sort of grind sideways. But again, little subtle lower highs. You know, this is that's a decent enough sort of lower high, but this one here, subtle lower high, and that was obviously coming in, as we've got it marked out, with the buying power was not coming up. And this is the same thing that I was talking about with Aussie on the short time frame. But, you know, it's not a true sort of negative. Well, it is a negative divergence, but it's not like a super obvious one. But the point is, it ground its way back up to the highs of this previous high here, but you're not seeing the buying pressure coming up and matching it. And then subsequently, what do? You get this bang, you get this sell down. So it's a matter of just getting a couple of these things working together to sort of give you the confirmation. Because, you know, I mean, obviously this is attempted to break down a number of times, but really just bought back up, bought back up, bought back up each time. But these little subtle moves are what you're looking out for. And I think it was around this must have been around Tuesday, so last week, that I was saying, look, there was no real reason that I could see for this to sort of be breaking out to the top side. So what is it? It's then range bound. So I've got this little consolidation box marked up here. And if it's consolidating, if it's just in the box, and there's no reason for it necessarily to break one way or the other on a fundamental sort of driving factor, well, what's it going to do? It's going to continue to range. So at the top end of the range, well, shorts are the obvious, and here we are, bang, back down here. So as I said, look, at the moment, we've got a sort of bit of a confluence because it's very close to this rising support. We've obviously got this sort of horizontal, which has been supported a number of times. So this is why I've got this little alert set up down here, because if we break down here and we sort of start to see this drive down here, you've got this rising support. So it means it's lost its momentum of upward gains, and it's starting to really shore up, and we can start to look for, okay, where are these downtrend channels going to be? They're going to be something, you know, obviously you've got to wait to sort of see where it goes, but it could be something along these sort of lines. You know, obviously we've got to wait to sort of see how it plays out, but that's what we're going to be looking at. So, but you need, first things first, you need to break this horizontal, because we know that the market, for whatever reason, love to buy it at this level. We can see it. It's on the charts time and time again. Every time it's come down here, people are just sort of going, yep, bang, that's beautiful. Let's buy it up again. So you need that driver. And broad US dollar sell-off, the change in their sort of the Fed sort of policy and outlook, that could be the driver. China's got a lot of news going on in the background, which I don't think's been getting a whole heap of attention, but I think sort of really sort of based on sort of how badly or poorly they sort of handled their whole sort of housing crisis kind of thing. I think that sort of they're really trying to sort of save face on a couple of areas now. So you're seeing little bits of news come out where you know, Albanese's just gone out and he's just over in Beijing spoken with Xi. He's invited him out to Australia. The US is obviously, you know, they're the major two that you want to sort of get them working side by side. They're sort of even sort of saying, look, if it's mutually beneficial, that they'll sort of run some sort of military training exercises together. I mean, the last couple of years, this is unheard of sort of stuff. So, you know, the more the better in terms of risk and risk on positivity, that if these two guys can go, okay, you know, calm down a little bit with sort of like the potential of sort of like, everyone talking, oh, this is going to be, well, the thing that kicks off World War III or yada yada. If these two can calm down and work together, that's very much a sort of a signal of a sort of bit of a risk on kind of sort of rally and sort of vibe to everything. And obviously that's going to help Aussie. And if Australia can sort of also reduce their sort of trade tariffs or whatever we've got with China going both ways, again, that's going to be another thing that sort of helps the Aussie. But these things, I don't know, I haven't heard a lot of them, or not. I sort of come across them and I pay attention to them, but that hasn't been getting a lot of attention. So I think very subtly in the background, they're sort of working away, trying to do their thing. So yeah, we'll just have to see how that goes. But the short term, sort of once this alert can kick off and we can get this breakdown to the downside here, yeah, I think we sort of can be moving down to our little price. Sort of this is pretty much short up as a range. So this gives us our range target just around this sort of 720 zone. All right, that's about it from me.